What's up, crypto fam? Welcome back to the show. And man, do we have a banger episode for you today. There's this brand new XRP ledger amendment brewing that could literally open the floodgates for the world's biggest institutions. I'm practically bouncing off the walls here. You guys ready to witness history? Because mass adoption from the institutional giants might be closer than we think, and we're about to break it all down for you. Quick market check. We're looking at crypto's monster $3.98 trillion market cap, taking a little 3% breather today. Bitcoin's flexing above 115K, Ethereum's chilling above 4,300, and our beloved XRP is sitting pretty at 299. Sure, XRP's pulled back 4.2% in the last day and 6.7% this week, dancing between 295 and 315. But here's what I want you to remember. Zoom out to that 265-365 range, and what do you see? Just good old-fashioned market chatter. We're not in panic mode here, people. Think of it like a basketball bouncing around the court. Still in play, still in the game. The charts might be showing some red, but the vibe is still bullish territory with some healthy back-and-forth action. If this XRP update helping you out, please smash that like button. It really helps me reach more people in the crypto space. When you like the video, YouTube pushes it to more XRP investors and traders who need these updates. Now, let's get back to the video. All right, let's get this party started. But wait till you hear what Michael Saylor just said. Holy moly, this is going to blow your mind.
Bitcoin's the only proven digital property that we have created in the world. We have created a property and not a security. The definition of property is a common commodity that is beyond the control of any one individual or corporation. If something is deemed property in a legal sense, it means it wouldn't be regulated as a security by the SEC. Gold is property. Soybeans are property. Wood, lumber, land is property. Bitcoin is property. Everything else in the crypto ecosystem, likely they're all securities.
Look, that statement is just flat out wrong. And guess what? We're not dealing with Gary Gensler's witch hunt anymore. These are Michael Saylor's talking points. But here's what I think was really going on. Gary Gensler's whole witch hunt, that was basically a masterclass in market suppression by design. While they were keeping the crypto market down, the big banks were quietly positioning themselves behind the scenes. They knew they couldn't stop this train, but they figured they could at least slam the brakes and buy themselves some time. That's exactly what we're seeing with the Ripple Trust and Circle Trust licenses right now. They're still trying to drag their feet and delay the inevitable. But at the end of the day, this thing's happening whether they like it or not. Now listen, everyone's got a right to their opinion, Michael Saylor included, but nobody gets to make up their own facts. XRP is not a security, period. And here's the kicker. The SEC doesn't even consider most digital assets securities anymore now that this whole witch hunt circus has packed up and left town. Meanwhile, Goldman Sachs is calling for 3 Fed rate cuts this year. And let's be real, there's not much of this year left to work with. There's so much buzz about rate cuts starting in September. And honestly, can you say bull run? Because any cut is basically going to juice the markets and get people excited to take that cheaper money and throw it into riskier stuff, especially crypto. That's exactly what I'm seeing happening. And trust me, there's way more coming from this whole situation. But here's the big question. How's this going to hit Circle down the road? This is huge, folks. Circle hands over 50 to 60% of their profits to Coinbase. So when rates get slashed, their profit margins just took a hit. Whether it's a quarter point, half point, whatever they end up cutting, that's literally money straight out of their pocket, and they're already giving more than half to Coinbase anyway. Now here's where it gets interesting. Other exchanges are watching this play out, and they're thinking, why would we keep pushing USDC when we're basically helping Coinbase get rich? This whole thing is far from over. I'm telling you, we haven't seen anything yet. And then we get this news drop. Lemonway's hooking up with RippleNet to give marketplaces instant payouts. All these little connections are happening behind the scenes, right? Different companies, different protocols, just quietly building while the market's absolutely tanking like a brick. You see what's going on here? They're not hitting the brakes. They're not sitting around wondering, what if this doesn't work out? Nope. They're doubling down. And it's exactly in moments like this where the real magic happens. I actually saw this post from Digital Asset Investor, shout out to that guy, where he's talking about this conversation he had with his son about investing. He's explaining how these down markets we're seeing right now, this is literally where real wealth gets built. Because this is when the people who aren't freaking out, who've done their homework and know exactly where they want their money, these are the ones making moves while everyone else is running scared. Because here's the thing, you can never nail the exact bottom and you can never nail the exact top. That's just reality, right? So we're in this crazy moment, and guess what? I actually bought the dip this morning. Don't believe me? Look right here, boom, there's the proof. I scooped some up. I think I grabbed it around 298, 297. Honestly, doesn't matter what the exact price was. Point is, I bought that dip this morning. And let me tell you, it felt scary as hell, but I did it anyway. Didn't go crazy with it, but I bought enough to stick to my plan. Not giving financial advice here, but I'm really glad I pushed through and did it. I see massive value here, no question. For me, it's not about trying to get the perfect dollar cost average or any of that stuff. I'm just trying to stack as many of these assets as possible before all the regulations get sorted out and this tsunami of institutional money comes crashing in and sends prices to the moon forever. And speaking of big moves, check this out. Breaking news from Gemini. This major exchange is getting funding from who? Ripple. They're gearing up for their NASDAQ IPO, folks. And boom, there's the Ripple credit agreement right there. They're literally handing out loans, people. How awesome is that partnership? I'm telling you, I would love to see Gemini and the Winklevoss twins show up at XRP Las Vegas 26 and get on stage to talk about this sweet little deal they've got going, plus everything else they're cooking up. That would be incredible. And look at these legends right here. Remember just a few weeks back when Dom and Phil Kwok, the guys who started Easy A, were front and center at the New York Stock Exchange? I'm bringing this up because when I saw that photo, it hit me. While everyone else was sitting around whining about XRP Ledger not getting enough adoption, these two just went out and basically built the app store for XRP Ledger and blockchain, just like that. Now they're sitting pretty with a $3 to $4 billion valuation, while everyone else was busy complaining and spreading all that garbage about how we weren't a top-tier asset anymore. What a bunch of nonsense that was. These guys had their heads down, grinding it out, literally flying all over the world, and they're still doing it. Mad respect to them. And check this out. VetXO was on stage at XRP Las Vegas. I actually got to meet him in person, and let me tell you, the guy's amazing. He's building this crucial institutional piece that's about to go live on XRP Ledger. Basically a must-have for compliant usage. So Credentials has 28 yes votes and is super close to hitting that activation timer. Along with other amendments that are getting fixed, Credentials is like the foundation for permissioned domain decentralized exchanges. It's what lets institutions actually use XRP Ledger the right way, compliantly. You can see we're really close to permissioned domains hitting that magic 80% they need. This particular one still needs a bit more support, but honestly, I love watching all this progress unfold. And look, Credentials is sitting right at 80% down here. Here's what's wild about all this. Everything together unlocks permissioned domains eventually. Once that happens, institutions can finally tap into the DEX, the decentralized exchange on the public ledger, and start making real markets. And this is Francis explaining it all perfectly. Credentials, domains, and the DEX. Let's freaking go. This thing's not just going to hand Ripple a golden ticket to sell XRP directly. It's about to turn the DEX into the absolute king of XRP trading. And here's where it gets spicy. It's going to completely blow the lid off all that shady price manipulation garbage happening on those sketchy off-chain exchanges. I'm practically bouncing in my seat thinking about how XRP is going to perform on a squeaky clean DEX where nobody's pulling strings behind the curtain. You won't even need insane volume because all that trading action is going to flow straight onto the ledger like water finding its way downhill. Everything happens right there. Boom, done deal. But wait, it gets better. With permissioned domains, you actually know you're not trading with some random person in their basement. Everyone's been through the whole KYC and AML song and dance, so you can sleep easy knowing you're not accidentally doing business with someone who shouldn't even be there in the first place. This is the kind of stuff that gets me pumped up. All right, feast your eyes on this next bit. All right, check this out. Khalid Alawadi drops this bomb. He's basically saying most of the XRP and RLUSD is probably going to end up locked into these permission domains and just stay there. David Schwartz jumps in and goes, hey, I'm cool with that, as long as money can flow in and out without a headache. But yeah, these domains might blow up way faster than anything happening outside them. Eventually, the domains could be the only game that really matters. And honestly, makes total sense. That's where all the big institutional money and liquidity is going to pour in, right? We all get that. Then David drops this perfect analogy. It's exactly like how the internet exploded. First, you had all the tech nerds jumping in early. Then big companies started adopting it, and boom, enterprise adoption opened the floodgates for everyone and their mom to get online. Same playbook here. Regular folks can still jump into the permissioned areas. They just got to prove they're not on some sanctions list or breaking whatever rules the domain creators set up. And here's the cool part. Anyone can create their own domain with whatever rules they want. Sure, the Wild West unpermissioned stuff will still be around, but it'll probably become this tiny slice of the pie while the real action happens in the domains. Now, Anders breaks it down perfectly. He's basically saying permission domains are going to be the golden key that lets all these big regulated financial institutions finally jump onto the XRP ledger DEX, just like I was explaining. And Schwartz is dropping truth bombs here. He's saying there's a real chance these permissioned areas could get so massive with volume that regular retail traders would basically become background noise. The institutional money would be so huge that retail wouldn't even register on the radar anymore. This is exactly what we've been talking about for years around here. The internet was this top-down thing where governments and big institutions used it first, then it trickled down to everyone else. But crypto, total opposite story. This whole digital asset revolution has been pure grassroots, bottom-up energy from day one. Now, here's where it gets really interesting. We're watching this massive flip happen right before our eyes. The Stablecoin Act passing, the Genius Act getting signed into law, and we've got the Clarities Act coming down the pipeline in the next month or two that's going to get the presidential signature. This is literally the moment where the top-down strategy kicks into high gear, and all these massive global institutions are about to flood in like a tidal wave.
Need great payments. And so we just sort of laser focused in on payments. And I think the other thing that we did different from the very earliest days was everybody else, including us in the beginning, had this ground up strategy. Like if you don't have a strategy, your strategy is get everybody to use the thing that I think is great. And I think a lot of companies are still pursuing that. But I think there's also a sort of top down strategy. And that's kind of what the internet did. Like the internet got governments to adopt it. They got universities, they got sort of big players. And so we decided, what are the biggest players? They're banks. And we went after banks. We probably should have aimed a little bit lower than that. The problem with banks is obviously like banks are a big deal. Like any crypto partnership with a bank is a big deal. But the problem is banks are slow moving. And they're not, and especially, and the bigger they are, the less interested they are in innovation. The very biggest banks talk about how important innovation is, but really, if they could push pause on technology, they would. Why, right? You know, why would they not want to freeze time where they're now like right at the top? And so aiming just a little bit lower, you have people, you have companies like non-bank financial institutions, payment service providers. These are companies that have the resources to make a big difference. Like scoring one of them using a cryptocurrency-based system matters. You know, it's not like, you know, you don't have to get thousands.
And boom, there it is. They've got over 300 financial institutions in their pocket, including major banks that we know about. So this whole thing gets absolutely wild as we cruise through these next few months, watching legislation get passed and signed. Then we hit the sweet spot, whether it's 26 or 27, when all these laws actually kick in for real. That's going to be another massive turning point, no doubt about it. But here's the thing, that window between right now and then, we're talking about an absolute tsunami of liquidity crashing into this space. I'm completely convinced of it. Now check out what Dark Defender's showing us here. This is beautiful stuff. He's got us watching 305, $3, and 292, and guess what we're staring right at? 295. Damn good call, Dark Defender. Seriously impressive. And hey, massive shout out to Greg Crypto too, because he nailed that noise channel prediction. Said it could drop all the way down to 265. So if you see that price action, don't freak out. That's just the noise channel doing its thing somewhere between 265 to 360, give or take. But look at this beauty. Greg Crypto's laying out ARC 1 versus ARC 2 for us. The structure of ARC 1, see it right there? It's basically identical to what we're looking at now from a technical standpoint. The only real difference is how long each one takes to play out. So the million-dollar question is, are we chilling in Arc 1 where it's just a timing game, or are we already in Arc 2 just sitting here waiting for that final rocket ship ride up? Honestly, I'm rooting for Arc 1 all day long because if we're in Arc 1, that means we've already been through this rodeo before. Arc 1 gives us some sideways action, maybe some consolidation, and then boom, we get to experience Arc 2 later this year too. How incredible would that be? Look, I have no crystal ball here, but this chart is absolutely gorgeous to analyze because we know there's serious talk about north of $10 trillion flooding into this space. Some people are throwing around $9 to $10 trillion. Others are calling for a wild $13 trillion. And that could all happen before we even flip the calendar to 2026. So here's the brain teaser. If we see $10+ trillion pour into crypto in just the next few months, how much of that do you think finds its way into XRP's market cap? Not financial advice from me or anybody else, but man, it's fun to think about. All right, folks, I'll catch you on the next one.